Hi, everybody, and welcome to our third lean-in for the month of March and April. And I'm Michael Linke. I'm the General Manager here at the Institute of Architects, and it's really good that you can join us just on this very informal 30 to 40-minute session, which is looking today very much at how to protect our businesses, how to protect our architectural practices, and make sure that we have the tools and resources available to make sure that we can survive through the COVID-19 and come out flourishing the other side. We're really pleased to be able to welcome Melissa Healy from DFK Everalls, and she's based in Canberra. She's one of the directors at DFK, and she's in the accounting and business advisory sector. She specialises very much in looking after professional services firms, particularly in the building and construction industry. So she looks after architects, she supports engineers, building and quantity surveyors, and it's really fantastic to have Melissa with us today to run through this presentation. So that's enough from me. What I'd like to do is just hand it over to Melissa. Her PowerPoint's ready to go, and Melissa, welcome to the lean-in.
Thanks very much, Michael, and welcome everybody. Thank you so much for joining us today. Hopefully the NBN satellite connection stays good for me, so we'll see how we go. I'm also aware that we've got quite a variety of size firms, so I'm going to try and cover everything that will be relevant for sole traders all the way up to people who have big teams and have to pay payroll tax. So I'll run through things quite briefly, but feel free to let Michael know if you want me to cover anything in a bit more detail via the chat box. So what I'd like to talk to you about today is three things. One is the immediate, in terms of you need to protect your team because they are your biggest asset. So I'll talk all about these in a little bit more detail in a second. In the short term, it's all about protecting your cash flow because cash is king and you need to be able to pay your bills. And in the slightly longer term, we need to make sure that you protect your business so that you can ride this out and be ready for the recovery, which we hope won't be too far away. So in terms of the immediate stuff, you need to protect your team. You need to reduce the risk of transmission. So that's getting people to work from home, using Zoom meetings, and practicing social distancing, especially if you do have anybody left in the office. You also need to make sure that you comply with all government regulations. This includes obviously all the COVID-19 stuff about staying at home, travel restrictions, all that kind of thing, as well as OH&S rules. So if you have sent your team home, make sure that they do have a proper area workspace set up, that they're not tripping over cables and cords, got the right chair, all that kind of stuff. And of course, you do need to comply with all the awards and Fair Work Australia kind of things if you're starting to have difficult conversations with your team members. And thirdly, do stay in touch with your team, particularly if they're working from home. Try and talk to them every day if possible. Use my company's got a WhatsApp group going on so that people can talk to each other on that, and we've got instant messaging, and we're having regular Zoom team meetings. We're even doing Friday night drinks, virtual drinks, to make sure everybody keeps in touch because particularly the young ones are struggling with this lack of face-to-face contact. So that's what you need to do in the immediate. In the very short term, like now as well, it is all about protecting your cash flow. Things are going to get interesting. Some businesses are doing fine, like there's no change to what they're doing. Other clients of ours are starting to see slowdowns, and of course we've got a whole pile of clients that have also been shut down. So there's quite a mixture out there in the economy, and so protecting your cash flow to make sure your business can survive this is critical. So what you need to do is make sure that your inflows are going to be the same as your outflows. So that means a combination of protecting your money coming into the business and limiting your money that goes out of the business to make sure it's no more than what's coming in, unless you're willing to use up cash reserves. So you need to do your cash flow budget on a 1 month, 3 month, 6 month time horizon, and really keep a very close eye on how that's going. It's more than just break-even analysis. This is just brutal cash in versus cash out. So do your good, bad, ugly analysis on it to find out where the pain points are. And for example, if turnover drops by 10%, this is going to be the situation. If turnover drops by 20, 30%, this is going to be the situation. If turnover drops by 50%, that kind of thing. Work out where those pain points are and what your steps in your response plan is going to be. But at the end of the day, you're either going to need to keep your revenue up and or get your costs down. So let's have a look at that in a little bit more detail. When it comes to protecting your revenue, the first thing to do is let clients know you are open for business. Let them know about any office changes. So in terms of office hours or the fact that you're working from home, but you can still do everything via Zoom and mobile phone and all that kind of stuff. You need to watch your workflow pipeline very closely to make sure that you've got work for your team members to do, and or to generate revenue. So get on the phones. Either way, you want to keep in touch with your clients and get a feel for how things are going. But yeah, watch that pipeline very closely. And of course, chase your debtors. So if anybody does owe you money, please give them a call to make sure they are going to pay you on time. Or if for whatever reason they're already struggling, then make sure you at least get installments. Don't let them fob you off for 3 months or 6 months, that kind of thing. Try and get, even if it's 20%, 25%, 50%, whatever they can afford, get a regular installment off them. If you can't get money out of your clients, then you have to look at other sources of cash flow. So you can talk to your bank manager. Most of them are now finally, just in the last few days, getting the ball rolling on making offers to small businesses to let them know that you've been pre-approved for a certain amount of borrowing. But otherwise, we've also got those new small business loans that are 50% guaranteed by the government as well. So banks might be slightly more inclined to lend you money than they were before when they weren't going to have any security, kind of thing. Obviously looking at your government stimulus package support and what's available to you and your business and when it might be available. So I'm going to go through all of that in a bit more detail in a minute as well. And of course, as owners of the business, unfortunately, when times like this happen, sometimes we have to dip into our own pockets to, top up the business and, just treat it as an investment in making sure that the business is there for the long term. Worst comes to the worst, or if you're getting really desperate, also just have a quick look around the office. Is there any surplus assets that you can get rid of? Facebook Marketplace, Gumtree, whatever. Raise some extra cash and or clean up at the same time by getting rid of some stuff that you're not using anymore. The other side of it then is obviously reducing your costs. So there's two parts to this. The first one is you need to minimize your expenses in total. So look at your what you spend money on each month, what is discretionary and won't matter if you cancel that for a while, and or what are you going to have to cancel anyway, even though you don't really want to. And of course, capital expenditure should probably be kept to a minimum depending on your cash flow. There's obviously some stimulus measures about capital expenditure that I'll talk about in a second as well. If cash flow is tight, capital expenditures definitely normally at the top of the list of things to minimize. Once you've reduced the total amount of your expenses, then the trick is to stretch out the payment terms for it. So if you can organise payment plans with the tax office, that I will talk about more, the bank, we've already seen that they're offering some stimulus measures, landlords, for those of you in commercial premises, and even things like utilities, telephone, that kind of stuff. Give them a call if you're really desperate and see if you can defer or pay half this month and half in 3 months' time, that kind of thing. The critical thing to remember when it comes to your expenses is that you must pay your superannuation for your employees on time. There is not and probably will not be any concessions on superannuation. So please make sure that's at the top of your list and does get paid on time. So when it comes to talking to your bank manager, if any of you have small business debts and to a certain extent even personal mortgages, go ring up your relationship manager at the bank, see if you can apply for a 3-month, 6-month deferral of your loan repayments. The bank is still going to charge you interest, but they'll just capitalize that, and what they'll do is either extend the term of your loan. So for example, if you go 3 months 3-month loan repayment free, well, they'll tack 3 or 4 months or whatever it is onto the end of your loan to make sure it eventually does all get paid off. Or alternatively, some businesses are foregoing 3 to 6 months worth of payments now and then bumping up their loan repayments when everything goes back to normal, such that the loan is still paid off on time. Okay, but only do that if your cash flow is getting tight, because obviously they're still charging you interest, so don't pay more interest than you have to. And as I mentioned before, you can get these small business loans from the bank, the government guaranteed ones or half guaranteed ones now. The advantage of those is that you actually do get 6 months repayment free, but then of course you've only got 2.5 years to repay the rest of it. So 2.5 years to pay back 250k plus interest will be rather hefty loan repayments. So you want to make sure that's just a short-term thing. For those of you with commercial premises, the idea when you're talking to your landlord is to ask for a rent deferral or reduction over the next 3 to 12 months, probably 3 to 6 with any luck. What we've seen our clients talking to their landlords about is a 3-month rent deferral. So again, a bit like the loan repayments, spread the rent out over the remaining term. So you pay nothing for the next 3 months, but then your rent payments go up so that the landlord does get the right amount of rent by the end of the lease. Or you could actually ask for a rent-free period, a waiver for say 3 months. But landlords are always keen to keep their tenants, so the returning the favour is then that you extend the lease by another 3+ months at the end, so that they sort of get the same amount of money in the end. But so talk to your landlords. Most of them, we have heard the odd story where particularly the bigger ones are trying to be very tough up front, but your personal circumstances work out what works for you, and you're just going to have to negotiate. Now, the next few slides are all about the government support. Now, with the time available and bearing in mind we're still missing a lot of fine print on these, I'll go through them as best I can with the time frame, but there are fact sheets out there on both the ATO and government websites that you can find as well. And bear in mind, things do change, so before you rely on this, just double check that what you're doing is right. The ATO is offering some tax payment deferrals. Now, the big thing is you still must lodge everything on time. And this is even more critical now because things like the JobKeeper payments and your PAYG credits, that potentially 100 grand for small businesses, is all dependent upon lodging your BASs and tax returns on time. So otherwise, so still lodge your BAS, for example, your March quarter BAS, you still lodge it on time, just don't pay it, okay? You can get extensions of time for up to 6 months with no interest, and it applies to both tax returns. So for those of you who haven't finished lodging your 2019 tax returns, if you're stuck at home with nothing better to do, get your taxes up to date. So those payment extensions are available for all of that, and don't forget it's now FBT time as well. So if you haven't sent your accountant your odometer reading, you can do that today too. There's another possibility too. If most clients are on quarterly BASs, if for some reason business is that bad that the GST is now more than the GST paid, the input tax credits, is more than the GST you're collecting, particularly if you see a slowdown in client payments, such that you're due for BAS refunds, you can actually change over to the monthly BAS system so that you can get those refunds sooner. Obviously, that's a little bit more admin work, but if it means you get the money faster, then so be it. So those are the tax payment deferrals. The newest announcement from the government was this the original announcement from the government was this PAYG credit. It's called the cash flow boost. You have to be an active eligible employer, even if your PAYG was nil. So that means if somebody was below the threshold so that you didn't have to take any tax out, or if somebody was 100% salary sacrifice so that there was no tax taken out, but they were a genuine employee. So you had to be registered before the 12th of March. So the ATO is watching out for people doing dodgies to suddenly become eligible for this. So don't try anything funny. The idea is that you can get a credit for 100% of the PAYGW declared on your March and June quarter BASs, but there's a minimum of 10 grand. So for example, if you're the kind of business that has, for example, $5,000 worth of PAYG per month, or on your March quarter BAS, for example, it does apply to monthly ones as well, but for simplicity, we'll talk quarterly for a second. So if you lodge your March quarter BAS and you put 5,000 in your PAYG amount, then the government will still give you 10 grand back. If you are a large employer and you lodge your March quarter BAS with $60,000 worth of PAYG, you'll only get the maximum 50K back, and then you won't get anything on your June quarter BAS. Okay? It's paid as a credit off the BAS account. So as I said before, you have to lodge your March quarter BAS on time so that the ATO knows what your W2 amount is. And then on the 28th of April, roughly, they will then process the credit off that BAS account. So you might have, the normal routine is you've got GST, PAYG, and an income tax instalment on your BAS. Just lodge it. Then they will issue the credit. If there's any leftovers, if your BAS is 8 grand and they give you a 10 grand credit, they'll refund you the 2 grand difference, that kind of thing. So that's what they're doing there. Just a note there that it is a tax-free payment. It's therefore other income. So for those of you who do your own bookkeeping and processing, it goes to a new income account called other income. And so it's not a refund, if you like, of PAYG amounts paid. So your wages system is all normal. For those of you on monthly BASs, monthly IASs declaring your PAYG for your employees, they're actually going to take your March quarter BAS, times it by 3 for the PAYG amount, and then give you 100% of that back, but a minimum of 10 grand, maximum of 50 grand. Whatever you therefore haven't used up, you then get on your April, May, June IASs or BASs until you've got the full $50,000, but only up to the maximum of the 100% declared. So there's fact sheets out there. Hopefully that makes sense. So that's stage 1. It covers the period up until June 2020. Then what happens is we run into stage 2. So you need to lodge your June quarter BAS or June monthly BAS, finish your first stage credit amount. And then what they're going to do is simply, if you're quarterly, they're going to divide that amount in 2. And when you've lodged your June quarter BAS, they will give you another 50%. And then when you lodge your September quarter BAS, they will give you another 50%. Or if you're on monthly IASs, they'll do 25% after your June, July, August, and September IASs. So it's not that. So what you actually put on your BASs for PAYGW after the June one won't matter. It'll just be equivalent to whatever you got the first time. So it's a funny way of doing it, but that's what they're doing. The one that got announced earlier this week or Sunday was the JobKeeper wages subsidy. So if you have employees as at 1st of March 2020, and if your turnover has dropped by 30% compared to last year, and this is again why you've got to lodge your BASs on time and get your tax returns lodged so that they can see, and they'll compare it over the last month or the last 3 months. Please note it's only for wages paid from 30th of March 2020. So that's different. Like the employees had to be on the books on the 1st of March or stood down, but on the books at the 1st of March. It's only the wages paid from the 30th of March, but it's to all full-time, part-time and casuals, but only if those casuals have been with you for more than 12 months. And what happens is every employee, or for every employee, you will be given a wages subsidy of $1,500 per fortnight, but after the end of the month, after you've lodged monthly reports. Now, the ATO can see from your STP single touch payroll records what you've been paying people, and then at month end they'll reimburse you. So this is going to be a tricky one for those of you really struggling with cash flow. You have to pay your employees at least $1,500, and then the government will reimburse you the $1,500. But it might be a couple of weeks, up to 6 weeks, between when you've paid your employee and when you get reimbursed. Be careful with your cash flow on that front. For those of you with casuals that normally earn, let's start with people who normally earn more than $1,500 a fortnight. You just keep paying them as normal. You keep paying your SGC as normal, but then the government will reimburse you $1,500 per employee. So that's easy. Okay. If you had some casuals that normally earned less than $1,500 a fortnight, so maybe your admin, receptionist, or a part-time person, from now on, you actually have to pay them $1,500 a fortnight, even if perhaps you were only paying them $1,000 a fortnight before that. And then the government will reimburse you the $1,500. So they're effectively getting a pay rise. The thing to note is that the government has said, so using this $1,000 example, you pay them $1,000. Sorry, if their normal pay is $1,000 a fortnight, you only have to give them superannuation based on the $1,000 a fortnight, but then you have to top up their wages for the extra $500, and then the government will reimburse you the $1,500 that you've given them. So it's a funny one. What else can I tell you? Yeah, just be careful. And if anybody's already stood down people, they can still be counted towards this. So you can sort of put them back on the books and keep paying them this. For bookkeeping purposes, for those of you doing your own books, you need a new wages category in your payroll system for JobKeeper payment, so that it's not accruing superannuation, for example. And so when you process somebody's pay, either it's just normal pay because it's more than $1,500, fine. But if it's normally less than $1,500, process their normal pay with normal superannuation and then top them up using the JobKeeper payroll code.
Melissa, just a question that's come through, Melissa. In terms of that self-assessment, you said there 30%, determining the downturn in business. Who assesses that? Is it the architect, or is it the accountant working for the architect, or is it something that the government need to do? Who looks after that duty?
Okay, yeah. So first of all, at the moment, all you can do is register your interest in getting this JobKeeper thing. Then you'll be able to register for the whole system, which involves uploading some data, i.e. who's on your payroll at the moment and how your turnover is going. So the ATO is going to be able to double check the BAS this year versus the BAS last year. So you are allowed to sort of self-assess, and they've said they'll be a little bit lenient. So if you guess you're going to be down 30% and you only end up being down 28%, then they'll probably let you get away with that. But we're still waiting on this fine print of exactly how it's going to work. Because, it seems like you have to keep paying your employees and then wait until the end of the month to see what your turnover is, to see whether you're eligible to get the subsidy. And if you're not eligible for the subsidy, maybe you don't want to pay those people at all. So it is, we're still waiting on a lot of fine print as to exactly how this is going to work. So watch the ATO government websites and the news for more details as it comes on board. And certainly once we're able to actually register for this, we'll be able to compare. But a lot of it will be based on your BAS information. But obviously when you're doing quarterly BASs, so April, May and June, you're not going to report until June, but they're going to want to know what your turnover is for April. So there's either going to be part of that month-end reporting. We'll just have to wait and see.
Perfect.
But it's therefore critical to keep your Xero and MYOB files up to date and to have really good records.
Of course. Just one other question that's come through as well. If this means, and this is a good question from Shanine, who's on the call, does this mean if you've dropped your employees' time and they're earning less than, say, $1,500 a fortnight, does that mean that you have to increase them back up to that full time to gain that $1,500?
No, not to full time, just to 1,500.
Right. Okay. Good stuff. And the JobKeeper applies for new employees as well as existing?
They had to be on the books at the 1st of March.
Perfect.
So if you put a new so as long as they're full-time or part-time as at the 1st of March, it's okay. But unfortunately, if you put on a casual just in the last few months, or you're trying to put somebody on now for whatever reason, you know, we are starting to find, you know, some people have got employees that refuse to come to work because they've got family to look after, or social distancing and that kind of stuff. So you might have to employ somebody else to take over. But yeah, you needed employees at the 1st of March.
Yeah, great stuff.
A lot more fine print, unfortunately, still to come. And what I forgot to mention was, yes, it is available for sole traders. Again, part of the registration process will be that you probably just, you know, declare what your wages were, what your income was last year versus this year, and then the government will give you the 1,500. Unfortunately, it doesn't appear yet to cover anybody trading through a family trust that doesn't take wages and just takes profit distributions at the end of the year. There's a lot of lobbying happening to make sure those people get included as well eventually. Okay, so we've covered the PAYG credit and the wages subsidy. One last opportunity to preserve your cash flow is that some of you might have been paying income tax installments, whether that's for you personally or for your company, for example. And you'll have paid those tax installments on your September and December quarter BASs. The ATO has said that when it comes to your March quarter income tax installment that you'd normally declare on your BAS, you can vary that installment to nil with no problems at all. Normally they're fussy and they argue that if you underestimate by 10%, they're going to ping you at the end of the year for late payment interest kind of thing. But they've said you can vary that to 0. And for those of you who are really struggling, you can actually claim back on the BAS form. It's always been there, but you can actually claim back the September and December quarter installments that you've already paid and claim those back on the March quarter. So that might be handy for those of you who are struggling a little bit. But of course, remember that these are the PAYG installments that go towards your 2020 tax bill. So when you lodge your 2020 tax return, if you've reduced all of these back to 0, you're going to get a nasty bill then, but let's worry about that later and preserve cash flow in the short term. Excuse me. For those of you who are large employers and liable for payroll tax, I've got a few of the states in here. The ACT's being a little bit slow at the moment. We've just got a payment deferral, but it's only the July onwards payroll tax. In New South Wales, they have given everybody a waiver for April, May and June. You do have to apply online to get that waiver. Queensland is just deferring, but at least they're deferring March, April, May and June's payments until the 3rd of August, at least so far. So all of those extensions, you have to apply to the relevant state authority via an online form. The big thing is, as always, still lodge your forms every month on time. You just don't have to pay it yet. On the off chance that your cash flow is not too bad, or that there is actually some big equipment out there, most of you are aware that last year, you know, it started off at $1,000 and it was $20,000 and $25,000, and then $30,000 was if you bought any equipment up to $30,000, you got the 100% immediate instant asset write-off tax deduction for it. They've gone and bumped up the threshold to to a massive $150,000. I can't imagine too many architect practices needing a single piece of equipment that big, but anyway, they've increased it, but it has to be bought and installed ready for use sometime between the 12th of March and the 30th of June. And just a note on there, on the off chance there is something big that you want to buy, maybe a car, company car, don't pay cash for it. Preserve your cash, finance it with a chattel mortgage or a loan, not a lease, because that lease, it only applies to things that you buy outright in your own name, not lease off a finance company. And on the off chance you buy something bigger than $150,000, there's now a 50% upfront tax deduction for depreciation on those items, and a 15-month period to claim those on. So we've talked immediate, protecting your team. We've talked short-term, protecting your cash flow. This last section that I want to talk to you about is all about protecting your business so you can ride this out. We want you to stop and think strategically about what is critical to your business. What do you have to keep doing? What's core business operations? What do you need to stop doing because you don't have the people, the resources, the time, the energy, the money? And what do you need to do differently, e.g. Zoom meetings? So we want to make sure that you are ready for the recovery. There's been a lot of talk that this is a biological problem, and when we solve the biological problem via reduced transmission or whatever, or vaccinations, that kind of thing, that it will be a very quick recovery. So, think share market, you see prices crash and then they eventually pick up after the GFC and things like that. We're hoping this will be much sharper increase when it's all over. So we want you to be in the best place possible and ready for the recovery. So let's have a look at the things we need to do there. When we talk to our clients about their business and their strategic planning, we try and keep it simple. There's just 5 key pillars to your business. It's the finances, and we've already talked a whole heap about cash flow and debt management, so keep that under control. Clients, making sure they know that you're open for business, albeit a little bit differently. We're going to talk a little bit about your team and managing capacity and what you can do in those areas. And also reviewing your products and services to see if there's any improvements you can make there, and your systems and processes. So what can you tweak and change and update to be more efficient going forward? So let's have a look at some of these in a bit more detail. So as I said, finances, we've already talked about it, but yeah, double check, protect your cash flow, do that 6-month budget analysis, work out what you're going to do at the different stages, and have a system, keep your Xero, your MYOB up to date, keep track of those KPIs, call your clients so that you make sure the money comes in when it's supposed to, so you can pay your bills when you're supposed to. And know when you're going to be crossing the line into insolvent trading, because remember, all businesses have to pay their bills as and when they fall due. Otherwise, if you're insolvent trading, you then become personally liable for those debts. So there's some concessions coming up, but just be careful. That's the main rule, if you like. When it comes to your clients, as I said, keep in touch with them. Do you need to change the way you're working with them? But the big one is marketing. Stay visible. Be the name that is remembered, so that when everything comes back to normal and people need architects, your name is the one that comes to mind first. Okay? So you might have to be creative with your marketing budget and what you're doing, but LinkedIn posts and newsletters to your clients and all that kind of stuff, keep front of mind to make sure you're first off the rank when it gets better. Now, I've got a few slides here on your team. So already mentioned at the beginning, but just emphasizing your team working from home. Please do remember you have an OH&S obligation, so let them take their chair from the office if necessary. I had an employee buzz me the other day wanting to pop into the office and grab their plastic mat to go under the chairs. So whatever makes it work for them. Also, watch out for cybersecurity issues. Our IT provider sort of said, I'm getting all these phone calls from team members, but how do I know they really are a team member? And when they say they're locked out and I help them get back in, how am I making sure it's the right person? So talk to your IT providers and make sure, both from your people ringing, as well as making sure you keep the wrong people out. Give your team clear productivity goals. Have a morning Zoom huddle to focus on exactly who's doing what for the day, to make sure they've got clear targets of what they need to achieve. and do keep in touch with them. Yeah, some people are struggling with the isolation. So keep in touch both from a business point of view. You tell them what's happening in the business, and give them, this is your opportunity for good leadership, inspire confidence. Yes, we're monitoring it, yes, we're nervous, but quietly confident that we'll ride this out, whatever. So just keep in touch with them, let them know everything will be okay in the long run. In terms of your capacity, so when client demand reduces and or cash flow dries up, you are going to need to consider matching your capacity to demand, which therefore means maybe you're going to run out of things for your team to do. Before I do that, if I can also say, normally when we have a recession, we see a drop in demand, and then obviously cash flow starts hurting. What we're actually seeing here is an increase in demand, or at least particularly in March, where there was a desperate rush to finish everything before we went into lockdown. So we were busy, we did all that work, sent out all those invoices, and now clients are going, can't pay you. So it's quite unusual to have a lot of demand, but a problem getting paid. So normally both go down, both demand and cash flow goes down. But anyway, that's just something to think about. So when you do run out of things for your team members to do, we are going to have discussions with them about how we reduce number of hours. So I'll talk about that in just a second. But the point is, you still have to comply with contracts and awards. Please go and have a look at the coronavirus page on Fair Work's website. They've got some brilliant stuff on there about the stages and what you need to do in each of the scenarios. But the idea is you can look at a progressive reduction, so not necessarily in this order, but this is the rough idea. Banning overtime, no more casuals and subbies, asking people if they want to go on voluntary leave, particularly if you've got somebody who has family to look after, kids to homeschool, all that kind of thing. Maybe they want to use up some of their leave. Or you might get to the stage where you want to try and really strongly encourage people to take leave. Again, this is where you go and double check your contracts and Fair Work Australia for if you can force them to use up their leave. And otherwise look at reduced shifts or unpaid leave. So putting people on 80% pay for 4-day weeks. We've already got a couple of clients looking into that. And if the worst comes to and I suppose that the stand down kind of stuff is where that reduced shifts and unpaid leave comes in, where you're basically telling people, we love you, we want you, but we've got no work for you, we're standing you down, no pay. And again, there's lots on Fair Work Australia. To stand somebody down, you must have no useful work for them to do. All right. But if the worst comes to the worst, you can make voluntary redundancies and compulsory redundancies. The big thing is be strategic. Who are your core team members who can multitask and therefore cover somebody else's role if you need to let somebody go, kind of thing. Otherwise, are you doing it across the board, sharing the pain so all can survive? We had a client who got their team together and said to them, look, turnover demand's dropping off, cash flow's drying up. I'm going to either make 50% of you redundant, or I'm going to drop all your shifts by 50%. I'm going to leave the room. You guys talk about it and let me know which way you want to go. And sure enough, they chose 50% reduction in shifts rather than letting anybody go. So do share the pain on that front. If I can also say a combination of those two, if you've got anybody like single mums with kids kind of thing, and or somebody whose partner has already been stood down, so they're already down to being a one income family, maybe you can be strategic about who you do let go or stand down versus who you don't. So just being nice. The big thing is, if you want to be ready to restart, you really do need to look after your team and make sure that they are still engaged and that you care about them and you're doing your best to do all of that. Now, if you do run out of things to do, remember that there is always something productive to do, whether this is you or your team members. So get them getting their CPD and training up to date. Get them helping you with marketing. Everybody hates marketing and writing newsletters and blogs and stuff, but maybe your team members can do something. Doesn't have to be long stuff. It can be, quite a short little post on LinkedIn or Facebook or whatever else. Get them to review your website. Even your admin people can review your website. Keep an eye out for typos or what doesn't make sense to a layperson who might be looking at your website, that kind of stuff. Either that, or can they help improve the quality and diversity of your products and services? Can they do some R&D on new building materials? Can they be out there searching prices for materials in general, if you were to so use, that kind of stuff. And also they can help you with your efficiency. I mean, they're the guys who do the business. So can they help you write and update checklists, templates, standard letters, that kind of thing, job descriptions even, and procedures manuals. So, get all that up to date so that, again, when all this is over and we're all back into business, you can hit the deck running with all these new wonderful systems and processes in place. So that's looking after your team. I'm not an HR expert. Please look after your team. They are your biggest asset and you are going to need them. But at the same time, if you are struggling, get proper HR support, look at Fair Work Australia and all of that. So the other components of your business, products and services, review and improve. So again, if you've run out of things to do, use the time productively to have a rest, and then look at what you can do on this front to improve what you're offering your clients. And even things like your pricing and your payment methods. So getting 50% up front, or setting up so that you can accept credit card payments, things like that. Anything you can do to improve the quality of your products and services. So remember the end game. We're hoping this won't be forever and be relatively short term. It's not going to take a couple of years like the GFC did to recover. Hopefully we'll get back up and running a lot faster. So just focus on your core business and to be ready for the recovery. So that's it from the business side of things. I've just thrown in an extra couple of slides here to talk about personal support from the government. So again, not quite sure who's in what boats, but there are some extra support payments for Centrelink recipients. There's also the coronavirus supplement for people who are on New Start. So, the people who have already lost their job, they'll get New Start plus $5.50 a fortnight so that they can survive. There has been a relaxing of various rules to make more people eligible. If you get really, really desperate, you can have early access to your superannuation. There's 2 lots of 10 grand, one in the June quarter and then one in the September quarter. You have to apply to the ATO. So anybody with a self-managed super fund out there, do not touch until you've got permission from the ATO. They will write back to you and say, yes, it's okay. And they will send a letter to the super fund authorising them to release the money. And down the bottom there, for any of you who are doing the transition to work kind of thing and or getting a little bit of age pension, they've reduced the deeming rates so that you should get a little bit more age pension, and or they've also reduced the minimum pension requirements so that you don't have to take as much money out of your super fund, but if you need it to live on, you probably still will. So anyway, in a worst case scenario, please be careful, know when you are crossing the line and seek advice. There is temporary relief from the insolvency laws for corporations and for individual bankruptcies. So there's now 6 months protection. Normally, the minute you can't pay your bills on time, you are insolvent trading and personally liable for those bills that you incur after that. The government has said you've got 6 months to sort it out. So you've got 6 months. And they've also increased all the thresholds. So, people can't try and make you insolvent for not paying a $2,000 bill. Now it has to be a $20,000 bill. And as I said, you've got 6 months now to sort it out, not just 3 days. So we've got a little bit of room there. For those of you running companies, that should give you a little bit of peace of mind. Same deal with personal bankruptcies. Hopefully we won't go there. So I'm sorry I had to rush through all that so quickly, but hopefully you've got a lot of information now and you know what to go out looking for. If you would like any more assistance, we are doing personal business advisory consultations via Zoom. So it doesn't matter where you are, we can help. And also for those of you who are struggling with cash flow management, if you need a hand with that, give us a yell. And when everything gets back up and running, we're also pretty good at valuations and business improvement programs as well. And obviously being an accounting firm, we're good at accounting, tax returns, BASs, all that kind of stuff. So if you need a hand keeping up to date or your accountant is struggling, give us a yell on that front. And DFK Everalls, where I am in Canberra, we're our own little independent company, but we're part of DFK Australia, New Zealand. So for the rest of you around the country, feel free to, get in touch. But otherwise, we do have other firms in your local area that can help you as well. Thank you. Any questions?
Thanks, Melissa. What I've done over the course of this presentation is people have been emailing and typing in their questions. So if that's okay with you, we'll just spend a few minutes going through some of the questions that have come through. Some really good feedback, actually. So thanks very much for that. That's really appreciated on behalf of the membership. It's good to touch base on some of these critical matters. What I will do is I'm just going to share something in the notes with you all. Many of you have been texting and calling in just in relation to asking to see if they can get a copy of the notes. You'll now see on the chat box that there is a URL link straight through to Melissa's notes from today. So you can download that PowerPoint presentation and go through that again in the luxury of your own time if there's anything that's unclear in there as well. Obviously, reach out to your own accountant if you have any questions. But like Melissa said, if there is anything that DFK Everalls can help you with, then that would be fantastic. They're very keen to support you as well. I noticed we've got Felicity. Hi, Felicity. Felicity Sandoz online. She had a really good question that she's emailed through to me. And her question is for you, Melissa, and it's this. How do you establish and showcase any drop in income when many architectural firms have an income stream that has peaks and troughs? How do you showcase a drop in income when there's no consistency at the best of times? What would your response be to such a question?
Okay. The easy answer is that the ATO is going to go off your BASs. So the only information that we have so far is that they're going to look at it over either a 1 month period or a 3 month period. So they're going to let you average it out. So if you're 20% down in March but 40% down in April, they'll average it out to the 30% kind of thing. So a lot of it is based on information on the tax returns and on the BASs that you'll be lodging. Unfortunately, yes, I'm very well aware that architects have quite a volatile income, and especially project timing and that kind of stuff. The ATO has said that they do have discretion in this case. So if people if it doesn't appear that they've hit the 30% target, it shouldn't be a target, we're trying to keep our income up, not drop it, but if the worst has come to the worst and they're around that 30% mark, there will be a bit of discretion. And even some businesses who weren't even around last year, so the ATO's comparing it like March this year to March last year, or the June quarter this year to the June quarter last year. But if you weren't even around last year for the newer businesses, again, there will be a process for giving the ATO information that sort of says, look, this is what I earned in September, October, November, December, or the last 6 months, and this is what I'm earning now. It's obviously dropped by 30%. Can I please have the 1,500?
Great, thank you. Another question from one of our viewers, Heidi Pronk, is online, and I'm not sure if you know the question. You did say that you're not a HR expert, but what's your definition of a casual? Heidi has a contractor who isn't permanent. This gentleman has his own small practice and works with Heidi, say, 3 days a week. Would he, in this instance, qualify for job seeker? He's not paid pay as you go. There's no super for him. He's just on hourly rates. What's your response to that? Okay, so job seeker is the Centrelink payment for being unemployed. Job keeper is the one that comes from the employer. My gut instinct is because he's a sole trader in his own right, he should apply for job keeper, the $1,500 himself, rather than going through her.
If you, and by the way, if you do have people that have multiple employers, they can only register with one of them. They only get the one $1,500.
Perfect. All right. Good stuff. All right. Awesome. And another question from Heidi, she's just sent another one through. She said, please clarify how we demonstrate stand down. We've been told there's no stand down unless the industry is actually shut down by government. We hope it doesn't come to that. But, you know, we may have a partial stand down, Heidi says, as in we may be able to keep 1 out of 3 employees. And what's the redundancy requirement in our award? I'm conscious that, yeah, this may be going beyond the realms of accounting and finance business advisory. What I might do, Melissa, is send you that email and introduce Heidi to you via email. What I will say to everybody on the call is next Tuesday, we are being joined by Bespoke Careers, a recruitment and employment advisory firm who specialise in architectural careers. So they do have a lot of these questions coming through, but these are good. Keep these questions coming. I understand, Melissa, you may not be able to answer that. Yes.
So just, if anybody has any queries on that front, start at the coronavirus.fairwork.gov.au website. Okay. Stand downs can happen if you don't have any useful work for your employees to do. And certainly that might be you have enough useful work for 1 or 2 people, but not for the rest.
Right.
So start there. But yeah, you know, the idea is we want to stand them down because we want them to come back, versus redundancies, which mean that's it. Their employment has been terminated and you have to pay out all their entitlements and that kind of thing.
Okay.
But look at Fair Work as a starting point.
All right, great stuff. Thank you. And just a couple final questions before we break and go and grab something to eat for lunch.
Sure.
A quick one in terms of companies that have made, or I suppose had a reaction to this and had a big push before lockdown. This is a question from Michael Fitzgerald, who's also on the call. You know, and his team may have managed to get the money coming in for March. So March is going to be healthy, March 2020. It's going to be significantly higher in terms of income than maybe year on year, say March 2019. But looking at the forecast, April 2020, May 2020, June 2020 might be significantly destitute in terms of revenue and incomes. Will that affect JobKeeper, do you think?
So JobKeeper is going to be assessed from what we can tell, on a monthly basis.
Right.
So
okay.
You will have to report each month what your turnover is. So it's only ever going to apply for the wages paid from the 30th of March anyway, but based on the on the March turnover. But the idea is, yeah, you might not qualify for subsidy in April because your March turnover was fine. But as things drop off, so do register your interest, do register when you eventually can, when the technology exists, and just keep submitting your monthly reports, and the ATO will just double check, and 1 month you'll be able to claim it, but other months you know, the first month or 2 you won't, as the cash flow dries up. That actually makes it really challenging for businesses, because they're asking you to keep your employees on, but you won't know until after the event as to whether you're going to be eligible or not, depending on how much your turnover drops. So that's really hard. And I don't know the answer to that yet. No,
and I presume the government will, once they work through some of the more complex matters in this, be announcing those. I mean, obviously they've come through and given us a blanket sort of announcement as to what's happening in terms of JobKeeper, but then the details always come later, I presume, as they work through intricate sort of scenarios that are affecting individuals. So I presume that they will be giving us more of...
Well, they've got to turn it into legislation. Yeah, it's got to go through Parliament first. They've got to write the legislation and get it approved.
Yep.
And then they have to write the computer to make it work.
And I suppose
so that's why we're getting it for a month.
Yeah, and I think so. The final questions actually come from a couple of people, Megan and Sandy, both online, who had some questions around the ATO payments. So the Australian Tax Office reversing those BAS payments. Is that a loan or a gift? So those PAYG refunds, is that a loan to us, or is that tax-free gift? What is that?
The 10 grand to 50 grand times 2 PAYG credits, that is tax-free even. Like it's not even money that you have to declare as income in the end. It's brilliant.
Wow. Okay.
So and it's not means tested. As long as you're a small business, less than $50 million, you're with employees and all the rest of it, you're eligible for at least 10 grand times 2. So that's brilliant, and it's all tax free.
Great stuff. All right, I think that's about it for the questions. I'm sure people will download your presentation. The link is there online on the comments. Next Tuesday, we'll continue these. I find these really helpful, just an opportunity for us just to get together and have a chat every Tuesday and Thursday with the subject matter experts. So thank you so much, Melissa. It has been really fantastic to have you online here today. Thank you for that. I know you're very busy. It's good to see that there are some industries who are ramping up activity, which is good, and we just hope it continues for the architectural profession. Next Tuesday, we are going to continue with the next lean-in, and that is going to be presented by Krista Shearer from Bespoke Careers. Krista has been a long-time contact of the Institute and a long-time corporate partner that has got some really interesting and fascinating insights into the architecture profession globally and some of the key trends that we're seeing as a result of us going through COVID-19. So that's it for us today, everybody. And of course, if you can help, if we can help you in any way, don't hesitate to get in touch. We have our COVID-19 dedicated website resource as well. But enjoy the rest of your day, and we look forward to seeing you at the next Lean In. Thanks.